This is our Forex blog for September 5th, 2012, and like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. It's that simple. That's part one of our three-step Forex trading system. Develop or use our statistical currency comparison tools to find the strongest ones to buy and sell. Step 2, wait for entry, and step 3 is the exit. So we'll go through each of those easy steps. So you can see the Swiss. Actually, I'm going to sort this using our sortable currency meter. You can sort this from strongest to weakest. And the euro and the Swiss and pound and yen are the strongest. The dollar, Australian, and CAD are the weakest. So that being said, you can see the CAD's extremely weak. The yen was very strong from 930. Weak CAD, strong yen. You want to sell the CAD yen. It's that simple. Let's bring up the CAD yen chart. The first thing you look at when you look at the chart is where's the hourly moving average right here. The price is underneath it all day. Where is the point of control of yesterday using our previous day and previous week's value area right here. So price is underneath that as well. It's also, this is the previous week's most actively traded price, and it acts as a major support area, and once broken it tends to, actually this is the average price of last week, the orange level here, and yesterday's value area low. So underneath that is very likely to go the next support area here, here, or here. It found support, came back up, acted as resistance, good place to sell, good place to sell, and then eventually when it broke through, a lot of times the top or bottom of a swing is a double bottom or a double top. The third time an area gets hit, it almost always goes through it. It's about 80–85% odds. And so when it came back up to this area here, the triple top, the fact that it didn't go through here, it's very rare. And so that's a very high probability place to sell right here. And it's very likely to bust through the lows here. And you know ahead of time where your profit target is from the previous swing. You draw it. And this is an excellent place to get out, 79.03. This last trade you'd be short here at 39. You made 36 pips on that trade. Okay, going back to our currency meter, you can see the euro was extremely strong all day. This is not a currency that we typically leave running for our blog, the EURCAD, but we're going to bring it up just to show it. Very strong euro, very weak CAD, and obviously this thing just took off and went up over 100 pips. And this is a perfect example of why we use our range charts. Let's put on a 5 pips per bar chart. And while with a 5-minute chart and 15-minute chart, there's really no entries into this trend. There's probably quite a few using range bar data. So here you have range bar data of the EURCAD. And if you miss the initial breakout, you have this nice little pullback trend. Here's a EURCAD with the 5 pips per bar. And it's kind of chopping around, and then it breaks out from the range it's in. And really the best pullback trade to get into the second wave is right here. You got a nice 4-bar pullback, 1 bar up. That's a good reversal pattern. You can see the same thing here, 3-bar reversal. I don't really like the 2-bar reversals, but you got a 3-bar reversal here and here. So if you look at all the 3-bar reversals into this trend, you have this entry right here, which really only goes a little bit, comes back down. You might have got out of that trade at break even. This one here generated about 20 pips. This is a beautiful 4-bar pullback where you'd be in right here, and you got another 3-bar pullback here. So if you miss the first wave up, which it's very easy to do, you do have 1 trade here, 2, 3, 4, 5 trades, and really the only one that might have broke even or had a 2 or 3 pip loss was this trade right here. And another way of getting into this trade is using our digital signal processing based moving average. Put on a 5-period moving average, shifted 2 bars to the right, and it uses our digital signal processing advanced math code, very fast, catches up with price. And so here's the first trade. You would have been in here, here. Here's the pullback. You would have been in pretty much at the same price, and also this trade right here. Notice you're in. You're actually in this trade 2 bars later, and you didn't have to sit through the sideways action, and you wrote it up. using this. Also, I forgot to see this earlier. You got a 3-bar pullback right here as well that worked. And this is only 2-bar pullback, and of course that trade failed. You have about a 5-bar pullback right here that generated a little bit of a trade as well. So that's another very easy way of finding high probability trades. The Swiss is pegged to the euro, so the weak CAD versus the Swiss obviously is going to be a very good one to trade as well. CAD Swiss is going to go down, and you really didn't have a downtrend until about right here. This one only had about a 2-bar up move. One thing that we typically do is look at how many pips each currency moves in a day, and the more volatile currencies we use more pips per bar. This one you might want to use a 4 pips per bar, just because a lot of currencies lately have had very low volatility. So here we go with the 4 pips per bar chart. Because this one doesn't move as much, you have a nice 3-bar pullback right here where you'd be short once it went underneath that bar's low. You also have, here's a 3-bar pullback that it never broke that bar's low, so you're not in there. And a lot of times it goes up, and then you have a little wick. A lot of times the wicks on range charts, signify the end of the swing. As you can see, happens a lot. It doesn't mean it's going to go up 30 pips, but a lot of times it might go up another 5 or 6. So the fact that you had those 2 wicks here, as soon as it broke that bar's low right here, you've been shorted 96.46, I guess, and then you have the nice small move there. And keep in mind that once the market makes a big size move, you draw your fibs on there. Most of the time, the fib targets down here are going to be the end of the move. So if you start trading later in the U.S. session and you see a currency move down a lot, if the statistical momentum kind of runs out of steam, you can take a counter trend trade and make 10, 15 pips, as you can see twice there. One other way of trading, which I like to go over, uses our quote sheet and lets you see which currencies are above or below the previous days and previous week's point of control. So you can, on any quote sheet or hot list, go down to the scripts down here and put value area day and week. And what this is going to do is going to show you how many pips above and below those levels they are. If you sort it by daily level, any currency that's above the previous day's point of control in the previous weeks, these are the number of pips. This currency, if it's dark green, it's above yesterday's upper value area and above last week's upper value. So the pound dollar is a great one to be looking for buys. And then you can use our regular chart or a colored bar chart. Let me find the pound dollar one real quick. Here's the pound dollar chart. This is last week's most actively traded price. This is yesterday's most actively traded price. If you see a currency that has, the weekly and monthly trend that's up like this, if it comes down here and finds some support, you can try to find a buy near the low, especially when it hits our lower containment band. These are the previous hour's most actively traded price. You can see this one obviously shot up. Once it's above the previous day's point of control and it's above the previous hour's point of control, you're basically looking for buys. So you might have had this little rectangle breakout right here, which went up 10 pips. You have a nice 4-bar pullback right here, which went up a little bit. Another flag pattern that ultimately was the best trade of the day, and it went up about 35 pips. You always want to draw your fibs off the previous wave, and again, most of the time, look at that, to the pip. And this also happened to hit our 3.0 containment band. Probably 90–95% of the time, this is the maximum move a currency is going to make. So sometimes they hit this level and you see the bars turn from dark green to light green. This is such a high probability area that it's really worth taking a trade. It's worth risking 6 to 10 pips, because a lot of times you're going to get a 20 or 30 pip pullback off of this, which you can see you did. If you got short here, came down, the bars go green again, you get out of the trade. I would get short again right here. And I always initially put my stop above the swing high. And a lot of times it will make a 2-wave pullback, which will mean it's going to go somewhere between 59.01 to 58.96, which you can see pretty much was where it went to. So you're in this trade right here, kind of went a little bit your way, then came back against you, didn't really come up to the stop. So as soon as it starts going down again, I'm moving my stop immediately. This is how I handle counter trend trades. It's going sideways right here, and then it goes and the bars get darker red, then they get lighter, I'm going to move my stop down here above here, and then when it comes down to this fib area, the 1.618 usually is the maximum profit. I'm going to get out as soon as it goes above that bar's high here at 98. We would have been short on the second trade right here at 22. Nice over 20 pip win while risking about 8 or 9 pips. And that's really the key to trading. Small losses, big wins. And as you look on this chart, most of the time when it's underneath the previous hour's point of control, you're going to get a down move. When it goes from below to above, typically it goes up. A lot of times, sometimes it chops around like this. So when it does break down, you have this nice move here. It rallied back up, never got above that previous hour's point of control, but the next hour it opens up above the previous hours, and it goes from below to above the hourly moving average. We're above last week's average price, so weekly and monthly trends up. This is a trade that I would take. I don't really, when I look at trades, I say, well, what's the odds of this trade working? If the bars are dark green, it means there's a lot of intensity behind it. It found support at an area where it usually does. That means that traders are buying this very high probability support area. Came up here, the bars are dark green. I'm going to buy the breakout right here with a very tight stop right underneath the previous day's low. If a currency is weak, it won't get back above yesterday's low. So this is my first profit target. It broke through that. This is my second profit target. Then this is the next area. It pretty much stalled out here. I would have been out of the whole trade here. I probably would have missed this trade here. I would have bought the pullback here, and I would have bought the flag pattern here. Mainly because we have a double top right here. Usually it's the end of the move. You would expect it to break this low. The fact that it didn't, you have a nice, beautiful little wedge pattern right here, which those trades are very high probability because it's a low volatility pattern. The market's exploding up with high volatility, and then it starts getting lower right here, and it doesn't pull back. It also broke from below to above last week's upper value area. This is a very big sign of another wave up.